Hello, everyone. Today is Wednesday, December 23rd. And let's take a look at the markets. Definitely, the markets are choppy. If I were to choose a word, that would be the word for the day. Extremely choppy. And what do I mean by that? Just look at the previous day. Went from a red to a blue. And that is a pretty choppy move in the Forex market. There are a couple of currencies that I would call highlight currencies. That would be, of course, the US dollar, and primarily because of this whole stimulus situation in Congress and them not coming to an agreement. Now, the speculators of the market pumped a serious bull run. I made a commentary on that yesterday. And sure enough, with that bull run came the hopes that 900 billion would be put into the system. But unfortunately, it wasn't signed yet. And they still technically haven't come to a conclusion yet. All right. So as a result of that, because they haven't come to a conclusion yet, because it wasn't signed in, sure enough, that bull run slowed down tremendously. We actually had the current market movement for the US dollar change back to a sell direction, back to where it normally was. Unfortunately, even though it's a sell direction, there is still some extreme stress on that position. So it's not fully a complete sell. Therefore, we definitely would warn everyone to stay away from any US dollar trades, even if whether it be precious metals, US dollar trades. Stay away from any US dollar trades right now until we see a clear sign of which way these US dollar trades are going to go. Now, technically, you can take a sell position if you were to take a US dollar trade, but it's definitely going to be extremely volatile until those stressors are removed. Once those stressors are removed, then we'll be able to, see more clearly. But for the most part, there's still a lot of stressors in pretty much all the currencies. There's not a real clear currency. The clearest currency right now that's starting to become a little bit more clearer and clearer is actually the Great British Pound. There's some clarity with the Canadian dollar as well. And that's pretty much it. Those are the main three currencies that are pretty clear. There's another one that's trying to get there right now, which is the New Zealand dollar. But for the most part, let me rename them again. The Canadian dollar first, as far as the one that's most clearest. We definitely see a sell-off there. The Great British Pound attempting to get out of its decline, and a decent attempt, I would say. A pretty decent attempt. That would be second. And the New Zealand dollar, somewhat clear, not all the way clear. And the one that's very unsure and very rocky and unsafe is the US dollar. Okay. So if you were to get into the Forex market right now, your best, safest, considering the whole situation, because none of these currencies are really safe right now. They're all volatile. Would be the Canadian dollar for the most part, especially the Canadian dollar pairs, excluding the US Canadian dollar pair. That'll probably be the least. The last one on the Canadian dollar pair list. Pound Canadian dollar probably the first choice, followed by either Australian Canadian dollar or Euro Canadian dollar, and Canadian dollar versus Japanese yen, and Canadian dollar versus Swiss franc. And then, of course, the last one would be the dollar versus Canadian dollar. So those are the ones that we would recommend. But seeing, again, this whole market session. It's not the greatest market session, but there has been some improvement though. It's at 53% MAS score, which means there has been some alignments, and that's because of the dashed hopes of the bullish market for the US dollar. There was also another indicator too, the volatility index. Current market movement of the volatility index actually went back down. So it eased off the market. That pressure eased off the market from the volatility index perspective. So that's a pretty decent sign as far as, things starting to clear up. And then there's some things there, pairs there that are starting to open up some more. And I did make mention those pairs, what those pairs are. All right. So let's go ahead and take a look at the commodities market. We can also see a similar trend took place in the commodities market. That same down, up, choppy movement, down to 33% in the red zone and up to 67, close to 78%. Just such a drastic move from one day to another. A complete, almost opposite as to what took place yesterday. So that we saw the same thing with the commodities market. Gold is definitely under pressure as a result of the US dollar, of course. Silver has been holding its own, but still under pressure. All these commodities are connected to the US dollar. So that's where it's going to be a bit difficult to really gauge or participate or engage, I should say, in the commodities market. If you're going to participate and engage yourself in the commodities market, the best thing to do is to make sure you're, careful and make sure that you're just going to hang in for the long run. You're definitely going to feel the pinch if you were to participate in the commodities market, especially precious metal. We did see a change with the U.S. oil as well as UK oil. I would say that as part of the reason why the MAS score has gone up quite a bit. But for the most part, with the precious metals, there's definitely going to be a very volatile session taking place if you decide to participate in gold or silver trading. Okay, let's move on to the next market. That is the cryptocurrency market. There you go again, a complete different outlook. This one was a little different because here, oh, wait a minute, this one's a little off. I have it for Thursday. So that this is off because it isn't Thursday yet. So I'm going to go and make a revision on this. But that 17%, it's supposed to read 67%, not 17%. And that 67 is supposed to be moved over to the Wednesday. Okay, so we see the same thing there, that up and down movement with the cryptocurrency market as well. And that is primarily because some of these cryptos, they were slumping, but now they're starting to again regain again. So we're definitely seeing a very powerful momentum in the cryptocurrency market that hasn't let up. It hasn't let up. And last, but definitely not least, the indices market. We have the indices market here. With the indices market, we are still at a 47%, which is still in the red area, very close to 50%, but we do see a pretty significant jump, over a 20% jump, 27% jump to be exact on the MAS score. So that is pretty high jump, almost 30%. And that is primarily because we're seeing some rebounds. We're actually seeing some rebounds in some of these markets. And that is actually also a very good sign, again, because connected to the volatility. Not surprising, since the volatility index, which is at the bottom here, since the volatility index did go down, did drop, we are definitely seeing some pressure easing off a series of assets throughout all the markets. And so that's one of the reasons that you're seeing such a ease. As the volatility index drops, then all the pressure kind of it gives the market a little bit of a breathing room. Okay, we haven't seen it completely take place with throughout all the assets, throughout all the markets. But do know that as of today, as of currently, not seeing the U.S. dollar being manufacturally lifted up, really. We don't see an extreme volatile market like we saw yesterday, but still shaky nonetheless. All right, so the top picks area, you can see a lot of these that were emerging are no longer emerging, but they are still volatile. I did mention the Canadian dollar. Another one that's pretty clear right now is the Mexican peso. But I mean, you wouldn't want to trade that with the U.S. dollar. I mean, it's really doing worse than the U.S. dollar right now. If you were to pair up with that, but probably a good one would be probably euro versus Mexican peso or pound versus Mexican peso. Some of your brokers carry that, but keep in mind if you trade pound versus Mexican peso or euro versus Mexican peso, a very be very cautious. It's a very it's an exotic pair and it's very dangerous trade in the sense where it involves high risk. All right, so this is pretty much the the outlook on these pairs. I did put the pairs here that would be profitable in this type of condition. We did remove certain pairs that were no longer profitable, and that's because of the choppiness of the market, or due to how it affected those specific pairs, whatever those pairs were that used to be on here. But the ones that are listed here still predominantly the Canadian dollar. All right, so expect to see I mean, here to sum everything up is this: you can make some trades, but especially here in the midweek of the trading week, you're gonna be able to see some profits, but they're going to be pretty small unless you get involved with the indices. And if you do that, that's a very risky trade right now in this type of market condition anyhow. But if you get involved in these Forex pairs, especially the Canadian ones, and you do make some profit, it'll be just very small amount of profits. So if on average, let's say you took these pairs on a different type of market condition, a decent market weather condition, and let's say at the end of the trading session you made, let's say, about 400. In this type of trading session you probably make about 30 to 40 as opposed to 400 on average, if that's what you were making. If you made during a regular market session, let's say you made about $40. In this type of market session, you probably make $1. I mean, that's how extremely volatile these assets are. They're not confirmed. They're all out of line. They're all out of whack. And for the most part, again, it's highly due to uncertainty. We must really know which direction this dollar is going. This here, the best way I can explain it is this. All right, you have certain news in certain situations that have a level of impact measured from low to mid to high. We're still dealing with a high impact situation that hasn't even been resolved. So it hasn't been resolved, and that's one of the reasons why. And this is an extremely high impact situation. This is not your normal, report that's coming out on the job losses or this or that. This is way big. It's on the scale of the highest high impact situation here. So, and that's one of the reasons why there's just so much uncertainty throughout the market. But I don't want to discourage anybody out there to place trades if you are wanting to do so. But I will say the best bet to do right now, the best thing to do right now is just to wait. It is a holiday. It won't hurt to wait a couple of days, okay? Especially if you're going to be able to make money. And then there's, you don't want to put unnecessary trading stress on yourself that you don't need. All right. Yes, the market is still moving. I got it. And profits are still there. Okay. And if you got that kind of attitude that it's better to make a little bit than make nothing, all right, great. Nothing wrong with that. I'm not against that at all. Okay. But we're going to still be cautious on our end because the responsibility on our part is definitely much greater, seeing the responsibility we have been entrusted with, especially to those who subscribe to our services. All right, so I'm gonna end it right here. I'll see you on the next update. God bless.